Check, check. All right, let's get this little bastard closer. All right, where is you at? Right here. All right, everybody, welcome back. This is Cliff from Trishula Software, and today we are going to be going over some basics again. Today I'm going to show you all how to use some of your oscillators. Start using some basic indicators. So, we're going to get started here real fast. Give me one moment. Alright. Alright, we got our pouch lodged in. So, yeah, I got other stuff up right now. Let me switch down. Mongo, you depressing bastard. That's why I never play earnings, you son of a bitch. We should have stayed in Palantir calls. That was a very good trade for us today. Basically caught, where's that hour, where's that 2 hour candle? Where was use? Basically I hit from 138.04 and I got out at about 141.32. That was about a 60% trade win for us. My current plays right now, I'm sitting in Amazon swings for June 18th. Amazon's got a lot of buying coming in, and now that it looks like a lot of the money might start be rotating out. I know stuff like AMD. Let's see what else. Like, how come Micron's not up here on my one list? But we're starting to see a lot of the Mag 7 start to move up. Have these big violent moves, especially with all the current news with the whole hubbub in the Middle East with Iran and the U.S. making peace and kissing and making up and being friends once again. Pardon me. So, yeah, so right now sitting in Amazon calls. I got a Microsoft swing. You know, Microsoft has really been pumping lately. Kind of caught the tail end of this double bottom here, and I've been sniping plays ever since. Sniped one here yesterday on this beginning 2 hour candle, and of course I got 3 snipes in here throughout the day on Microsoft too. So that was a pretty good play. We're also in an Uber swing where I think we're doing. Let me double check. Would have helped if I brought my. If I brought my brokerage up during this. Sitting in at about 77.5 calls for 717. I'm currently down on that 31%. But this has a lot of time to move, and also it looks like a bottom's forming here. Pretty much in this zone between 68.43 and 70.46. Now remember what we were talking about in our first couple videos when it came to levels. You see price action hit a new high here, then it's going down and going down and going down, then it starts hitting this level. Well, what's going on at this level that's starting to look like buyers are coming in? And here would be the introduction into a type of indicator we call oscillators. You know, your RSIs. Right here is double back. It's a modified CCI, a consumer commodity index. I use this over in MACD a lot. Here is our official MACD, this complete hot mess known as Composure. Once you learn how to use it, it's going to teach you Composure. But let's take a look at this level back here. Let's start zooming out. Let's scooch this all the way over. Remember what I said, when in doubt, zoom out. You're wondering why price has fallen all the way down here. Well, guess what? They hit supply up. They hit their demand up here, and now they're going to go search for supply. So, a few weeks ago, hits 80.95 post earnings, drops all the way back down to the 69.71 level. I got in at about, I think it was 70.54 right here. And of course, it drops, goes up and drops. You can tell buyers are coming in here, but what is important about this level? Well, we zoom back out because remember, we kind of just had this going. Oh, we discover right here in this zone highlighted by Candlebug's protected low trench levels that this is a protected low, this entire zone. So buyers are coming in here. Look at what happened last time price action hit this level. Price action hit this level back all the way in late March, dipped down below, still within the zone, started buying. retest, more buying, and it actually ended up punching through this trend line here. Then it's going to retest again, try to get more buyers in the zone, then it starts going off until it reaches down in this zone again. Remember, your levels are important. But we're going to not use one with a whole lot of indicators on it right now. Granted, like what you see is kind of like my test is what I used testing while trading. Right now, I'm going to switch down to Microsoft right here. So I kind of have a stripped down version, and I can actually show you guys like what's going on. So, and I think for brevity's sake, I'm going to get rid of double back and our composure MACD. Let's just go normal RSI. We'll Alright, so this is a standard relative strength index provided by TradingView. You know, this indicator is free to use. I can't tell you if you have a free account and if you use this, if it counts against your indicator limit, because if you just use your basic free account, I think you get 2 free indicators that you can use. It's relatively cheap monthly if you go on ahead and you purchase like a higher tier package on TradingView. You can use more indicators, you can do more things. And it, my account right now really only costs me about less than $20 a month, but I have a premium account because of all the stuff that I do with this. Excuse me, thirsty as hell. All right, so we're here on Microsoft on the 2 hour. We're going to drop everything down to about a 30 so you can see how everything acts at 9:30 when it opens. So Microsoft has been a stock that we have been pounding a lot lately because, you know, Microsoft is relatively easy to trade if you mark out your levels, as of course you can see right here. But now you're gonna have to start understanding how to start using trend lines, levels, your dynamic levels. I'll throw up my moving average system here, and now a basic indicator. So how I figured that Microsoft was going to keep going up here to where I figured that I'm going to go 0 for 3 today, just scalping plays throughout this first hour. Let's go back to where I initially marked my levels. I have this level down here at 409.80 that's already marked. Now I'm looking at everything above this every time a green candle hits as there's buyers here, because there's enough reason that every time price action starts to wick all the way down, and we're not just talking candle body, but once you start to, it looks like you get that rejection wick going, that tells me buyers are there, and buyers are here. So once we start going over patterns, you'll start to see this more, but I'm looking at what would be a kind of like a double bottom right here. You know, I have a, you know, price hits in high, comes down to a new low down here, and then it just sweeps through the next few days and retests this level. So it bounced off of this level and bounced off of this level. Now granted, you have a complete like a couple dollar, like a $1 difference between how this closed here and how that closed here. It doesn't matter because we can sit here and talk about levels, but your levels also act as zones. And remember back, we were talking about retest zones. This is a retest zone. So you can't just, yeah, the levels are important, but you have to understand like how it acts within a level and what zone that level is in. And we've covered that already in the first levels video. But as I see price action start to go back up, I have 2 different RSIs up. Like this is the normal standard trading view. This is Trishula Software's Door Knocker RSI. This is a more advanced RSI. This gives you more so an indication. These vertical bars act as what we call a sonar. This tells you that buying and selling is taking place. And as you can see here, it does work pretty well. But Your basic RSI is going to tell you two things. What is the current strength of the trend per time frame? That's all it is. They call it relative strength. It's a relative strength index. How you want to perceive this is this. On both RSIs, you have a fast line and a slow line. Forget this green cloud on door knocker right here. But you basically want to see how your fast line, which here at door knocker is embedded in orange, how it interacts with the slow line right here. Same way down here. As you can see, like these are the fast lines and slow lines are basically near identical. The only thing is you have to determine what's going on. We're gonna start that. Now, we told you about how to use moving averages when price breaks through certain levels, your static levels, your more adaptive levels with trend lines. We'll actually draw this trend line right here. We got one here, and then we have one here, and then we have this right here. So again, I'm looking at all the levels. I'm looking at where the rejections are, where it looks like everything's retesting. As price action here from Tuesday starts to go down further, as it looks like it's retesting, I'm paying attention to how deep this slow line starts to traverse into this zone. In an RSI, you have what's called oversold and overbought. In this case, I'm looking for an oversold condition. Anytime your RSI fast or slow line hits down to what would be your standard 30 level, it will start to go into what's called an oversold position. Now, it's indicative that buyers could step in, but buyers stepping in really doesn't mean anything, because one, you have to understand the market's going to do what it's going to do. And you can't use this RSI as the end-all be-all for all your confluence. You have to do your own technical analysis and plan this trade. So how I started planning the trade was this. Again, I'm watching price action dip right back down into this level, and now I'm starting to look at my RSI right here. I see action yesterday to where price sinks, but then your first 30-minute candle, it's bullish, but it's also dipping back down right here in this is the same retest zone. What is this, ladies and gentlemen? We've talked about this before in the first couple videos. Not only is this a retest zone, but this is also a support. So I know if I'm getting that bounce down here, and I'm all right, and on the next 30-minute candle, I'm seeing this candle pierce above and test these 3 EMAs here to where now it's starting to test this fourth. And I'm starting to see the RSI slow line start to uptick. It's going to uptick very slow. This fast line is just tracking your price action. But once I get this first big break, once this fast line on the RSI comes down into the oversold end, and I see a retest right here, remember, whenever you see big candles, there's going to be a retest. This is where I start buying. So I initially bought calls here at about 411.72, I believe I did. Now I'm just waiting for the uptick to continue. And once it bounces back down to this level, just above this retest zone, once I start to see price action start to crack right above and clear and close above like this little EMA group right here, now I know I could be in a bullish trend. So now I have to end up swinging this thing overnight. Remember, you have to buy an option far enough out to swing it, but you're paying more premium. But I'm still riding the uptick of this Microsoft market, as now I'm starting to see it break through this trend line right here. I had a trend line break here like the day before, but I had no solid closure above. But I know buyers are coming in. The only reason why I know buyers are coming in, look at the day before where you had this first 30-minute candle. It looks like price dropped in pre-market, and then it started hitting this level, and then buyers just start buying it all up. Now remember, these are institutional buyers here, so they can buy this contract for like a July, August, September expiration. They'll buy like a couple $1,000,000 worth of it, because it's so far out that by the time that Wednesday open hits and price action hits down here, they're only down like 30%. They're not going to care about the 30% drawdown, because they know already everything's already priced and locked in. And you're starting to see your RSI uptick. It's just a matter of being patient. Now, granted, from aftermarket to pre-market here, we start to see a little weakness, but look at this last 30-minute candle right before the open. This would be about 9 a.m. to 9:30. Price action hits this trend line and then rejects, and then right at open, good night, Gracie. It went from 412 to a high of 429, and you hit that 3 times in one day for 50% hits. You know, that's a pretty damn good day. Usually you don't go in to another trade that you just ended up finishing trading. But when you see this enough and you can see that you're in a constant bullish trend and you don't see no sign of slowing down, you got to get on it. Now, granted, price action did reject up here, but also pay attention like to what this level is. There's sellers up here, and now it looks like buyers are starting to make that final assault to now make this resistance a support and then keep pushing further. Now, is that indicative that's going to happen? Well, if you followed the news today, there's going to be about a $3 billion buy-in of stock for Microsoft. Everything's already priced in. I just don't think the mechanics have been done. And what I mean by the mechanics is the actual transfer of money, that whatever brokerage is buying this $3 billion of Microsoft stock, and then Microsoft issues like the stocks. Yeah, granted, you buy stock, you can buy stocks on Robinhood, but when you're buying $3 billion worth, like, it's not like, oh, hey, you know, here's $3 billion, like, give me my couple million shares of Microsoft stock now, damn it. No, it's not going to fucking work like that. Something like that takes time. But once it takes time, like this bullish trend should continue. And, of course, the overall bullish trend, barring any type of hubbub. But this is just a quick lesson in how you should follow, like, you know, your RSI, how you use moving averages with it. Now, granted, it's really not a good explanation. It is pretty crude, but this is something that you're going to have to start testing yourself on. Now, granted, we have the paper trading options. You can paper trade at any time. Oh yeah, paper trading's already up. You know, so like if I decide like I'm gonna buy shares here, just when price action completely breaks through this pre-market high level, then yeah. But again, you have to start understanding, you know, how price action just treats these levels. You know, the ones you set statically here with the horizontals, your trend lines, and the more dynamic levels, more like your moving averages. That's pretty big right there. So, let's go find another example. Let's find an example kind of like on a long-term end, and then what's a good one to use? I don't want to use nothing that's been going too crazy lately. What about Cipher? No. Okay, yeah, like that's a pretty good example. Instead of using 5 moving averages, we're just going to bump this down to about, what am I using? 8, 14, 21, 50. We'll get rid of the 14 right now. And I'll do my standard color set for these. Once you start working with EMAs, like, you know what colors that, like, you want to use, and it'll just make things visually easier for you. 821, so that's going to be my yellow. All right. So right now I moved down, like I eliminated my 14 EMA because really I don't use it. Personally, like an 821 is always good, and I always keep a 5200 up. And again, remember that 5200 EMA or SMA combo, whichever type of moving average you use, that's your golden death cross. So whenever your 50 EMA here in white crosses upward on this 200 moving average in orange, that's your golden cross. If it crosses below, your 50 crosses below the 200, that's your death cross. And that's pretty much indicative of what type of trend that you're in and what you should be looking out for. So I automatically know that every time if I'm going here and trying to trade cipher, I'm going to make sure that if I see this white line above this orange, I know I'm looking at calls. Granted, you could get cute and try and see if you can get the pullbacks here, but you gotta be skilled on it, because at any time, like, you can try to go for puts and bank on price action breaking below this 200 MA, but look what happens here. Attempts this first bounce, goes back up. Is this level important? When in doubt, zoom out. Oh, okay. Now I know it's approaching this high that was reached back in November. So I know that this is not only an important level, but also the bottom of an important zone. So what are we going to do? We're going to start marking that bullshit. I'm going to mark it up here, and I'm going to mark it down there. So on longer time frames, I'm going to start looking at how my 8 EMA and my 21, this blue and this yellow right here, start to interact. Blue crosses up on 21. Okay, now I can start looking back into calls again. So, and also I'm looking down here at my RSI. Now, understanding when to get in on the trade is important, and an RSI can really help you with that. Because, yeah, price action starts to go up here. But look at your RSI, it's still down ticking. And take notice, like, when it's still down ticking, and once you have this cross that happens here, I'm going to highlight that for you guys. Oh, yeah. Look, you have your slow line crossing up with your fast line on your RSI. And yes, but I wouldn't make a trade until I know I see some sort of a pullback. You have to anticipate a pullback once a level is respected. Price action's respecting this, like, what would this be on Cypher? 1765 to 1813. You can tell through that rejection wick right there. Price action hit. Nope, we're not ready to go down. We're going to start grabbing some buyers. Look at this. We're going to start the assault up, like, and we're going to wait, and then right as market open hits for this very next day, and I start to get that 8 and 21 EMA intersect here, especially when it's intersecting above the 50 EMA. This is where I would start to go into long-term calls right here, or maybe like a short-term swing. It's just the nomenclature that's used in the trading realm. But pay attention to what your RSIs and what your moving averages is. Now, if I want to take this down and I want to use an MACD, I'll bring up just a normal MACD. Using composure might melt y'all's faces. This is your standard moving average convergence divergence. That's what your MACD stands for. You know, it basically is just a pattern of market movement. But I want to show you guys kind of a very little nasty trick I learned, and this really changed a lot of things for me and when it comes to trading. Remember how I talk about levels, trend lines, and everything? It not only applies for when how price actions chart it here. You can actually run plots directly on these lines, and I'll show you right here. Pay attention to all the way back in the beginning of May right here, right at the beginning of the month, where price action hits this level, dips back down to retest this zone where buyers started to come in, and it broke out from this most recent higher high prior. And then it tries to retest. I'm going to draw a trend line that signifies that. Now, granted, if you drew that trend line, you probably would think, okay, well, I only have a few days here to get in on calls. You know, and yeah, that would be a pretty good trade if you got it on the very next trading day and we waited at 2306 to 2548, especially on a stock low mid cap like Cipher Digital. Like, that would be a hell of a good play. But I want you to pay attention to what I did up here, and now let's trace it down here on our RSI. We have this peak up here, and then now we're going to find the other peak here, which we found, and now we're just going to continue to draw straight through. Now I want you to pay attention on two things. Right when this RSI turns on the slow end, right when it starts turning upward, indicating that you have like a little bit of a bullish trend right here. We initially stated that when we made this trend line, pretty much if you're banking on price action to crack above what would be this 2225 level, and that's what you would be waiting for on the trend line, the RSI can shave off literally 2 days, because you can literally draw the trend lines using the peaks off of the fast line, just like this. So once you see the fast line commit to this RSI trend line that I drew, and you see that you're in a bullish uptick, let's go on ahead and pinpoint this exact spot right here. Let me draw a line. Bam. See how drawing your own levels can save you time and potentially make you more money? You just have to get yourself acclimated to seeing it. You understand? Let's go back a little bit further here. We're going to pay attention to this area right here, and we'll start talking about how to integrate your MACD in on it too. I have a downtrend that's happening right here, right before it starts to hit this 1166 level. So you know what we're going to do? We're going to start drawing our trend lines. I'm going to take it from here, and I'm going to just trace the top right here. Now, I want you all to pay attention to the angle and how I drew this. And it'll make sense when I talk about how the price action interacts with this. Something that I've learned is that the steeper the line, the longer the wait. And what I mean by that is the following. Granted, we already see that price hits this level, drops down, and we have a bearish trend line forming. Price tries to retest this level. When it actually does, it looks like about 3-4 days later, drops right back down further to a zone where buyers are existing. Now, we're going to look at our RSI. RSI is trended down, 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 down. I got 2 sonar marks for potential buyers coming in, and then we have that violent move up, where basically this fast line crosses the slow, big candle, pierces through, and then retests back down. Your RSI is flattened down. It's not moving down, but now you have to be a little patient, because you don't want to be playing short-term options trying to get in on this big candle. Then the next 2 days, you're going to be dealing with $1 down, depending upon how much time you have left. That's why when you buy options, like especially when you're trying to figure out long-term plays, you want to try to buy as much time as possible. More expensive, but getting back. Granted, we have this trend line retest, and then we have this green candle following. That's a rejection. Now, granted, price is not hitting this. Price doesn't have to hit the trend line. Price doesn't have to hit the level. You know, your levels are just visual indicators of confluence. But you can start to see how everything's starting to patch together. Now, granted, we're going to start figuring out how to use this MACD with it. And I'll show you a few dirty tricks with this. One good thing about your MACD is that you can pretty much tell when a trend is basically near exhausted. And RSI is good at that, but the only problem is you have to really look and pay attention to how price action and the lines are moving. Granted, when price action here on our RSI hits this 70 oversold level and starts bouncing back down, price action is just going all over the damn place, as indicative as shown by this slow line. Well, that really doesn't mean anything. The MACD kind of gives you just a little bit more clarity. And right when you see your fast and slow line hit here and your histogram starts to mark bullish, but mind you, that this is where the MACD really helps. If these lines are above the 0 level, you're still in a bullish trend. Even as they cross back down and it looks like they're starting to cross back up, if they cross back up and cross back down, which they eventually do, it's still not indicative of anything of a bearish trend yet. You have to think, and you'll start to learn this term. You know, like you'll have price going up, and then everything will just range out right here. It's pretty much indicative of, hey, where the hell are we going to go? What are we trying to do? Like, are we gaining buyers here? Or what are we doing? Well, remember, these are all important levels. This entire big zone between 1674 and 2288 has these two zones where it looks like price consolidates, dips below, retests, and breaks back up. Could be indicative of the breakout that it just had today, and the retest, it looks like that's about to happen. But again, you're starting to see how things are starting to pin together. Just like this right here. We're going to target this area. Slow line down here on your RSIs being indicative, starting to bounce up and down off of this oversold level. Slow lines just starting to lose bearish strength and starting to turn upward in order to get bullish. Your MACD basically tells you, yeah, hey, we got this down here. We're about to start buying again. Now, when you start using MACDs, pay attention to your scale over here on what would be the right pane. You can manually adjust this to go left or right, but for the time being, when price starts to dip down like this, pay attention to how deep these lines go. These are your best indicators for when to spot your prime reversals. I'm going to show you on a much higher cap stock. Let's try Oracle. We're going to get rid of all these levels real fast. See how down here we had this big drop. This was all the way back in January. Dropped from 207 all the way to 132 within a month. But granted, you may see this cross down here and try to get in. No. The MACD will help you pinpoint on longer term trends where your precise buy should be, in what area. And you have to do it based on the actual depth of where these lines cross. The further away these lines cross away from this histogram, whether bearish or in this case bullish, will tell you everything and will save you tons of money trading. Now, granted, these lines cross here. It may just it has this violent spike, but then starts to peter out. You only need to catch just part of the move. From here, 134 to 158, Christ, that would be a career-defining trade for me. I would go absolutely nuts over that. And mind you, you have your RSI back up here as your confluence. So a lot of what you're going to be doing in trading, as some of y'all are dipping into this realm, is you're going to have to study, you're going to have to understand, and you're going to have to get used to what the market is going to do when a tradable security hits certain levels. You can buy all the indicators you want. Still not indicative of anything, because the market's going to do what it's going to do. The indicators are just confluence in order for you to gain confidence in how you trade. It's simple as that. Does it work? It works because it saves you stress when it comes to risk management. And that's the biggest thing in trading. You have to manage your own risk management. Watching these EMAs go and cross and understanding how price interacts is great, but everything still binds from the base law. Stocks trade level to level, and they break, bounce, or let me see if I can find a rejection candle somewhere, or reject based upon supply and demand. So granted, I know that was a pretty crude explanation of everything going on and how to use basic indicators. But granted, you should still draw your own levels. You should still be very invested in studying how this price action game works. Because the indicators are blind. If you just go in blindly, you're going to lose money, and then you're going to get mad. You're going to blame everybody, but I'm going to tell you right now, if you take the trade, you are 100% to blame. No one put a gun to your head and said buy or sell. You made the trade. You are responsible for every dime, and you have to understand that. The indicators are just confluence helpers, just to help you make more confident plays, to help you understand, to help you do better. Everything is still levels, 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 static, trend, dynamic. And when you start adding indicators in on here, oscillators are going to be your best bet starting out, especially when you learn how to draw trend lines on them, kind of like in that example we did earlier. Even here on Oracle, I'll draw a trend line from here to here. RSI breaks. I got two RSI peaks on the oversold end. Oracle starting to turn around, breaks this trend line. It happens pretty much what looks like between pre-market and aftermarket. Guess what? I'll go on ahead. I'll buy the calls. I'll deal with the drop down, because I know this thing's about to go up, because I have a clear penetration through 4 EMAs right here, bounced off of this 200 right here that's in a different color, the red color moving average right here, straight up, boom. It's not hard. You have to be patient and you have to work at it. This isn't like high school where like you can just graduate and not do one page of homework in your whole life. No, it's as simple as that. It's a hard game and it's a rough game. but damn it ain't if it ain't fun. But let me get out of here, guys. Again, this is Cliff from Trishula Software. Thank you for dealing with us tonight. And thank you for listening. I hope you learned a little something. And I'm going to try to get more videos up. I'm going to work on getting more Trading 101 videos up. And we'll probably live stream a little bit tomorrow. We have a bunch of development stuff going on here. Of course, we're still working inside our Discord server that we're building. We'll start getting our sports betting props back up for baseball. Right now, it's just making sure that a lot of this quantitative analysis that our agentic AI swarm bots do match up, and we're going to have pretty much good, accurate information for everybody. So we have a lot of accountability and a lot of work to do still. But damn, I love this stuff. This is like, if I could make $1 million a year and do this, I would be in plumb freaking heaven. You couldn't tell me nothing. But guys, I love you all. Thank you all for listening. Again, this is Cliff from Trishula Software, and we'll see you hopefully tomorrow. All right, bye.